This is our final higher time frame defining zone series. Okay, and in this particular zone, we want to determine the high and the low of the year. Okay, you want to know which direction price will move to in a significant amount of time during the year, and this is how you know it. So to start, you need January and February candles to print. You are going to mark out the highest levels or the week between January and February. In this case, January. So you call it YDZ, yearly defining zones. Okay? And the lowest here, you call it yearly defining zone. You can include a low if you want to. And the highest body, in this case, February have the highest body. That is the implied zone. And in this case, yearly implied defining zone. These levels are important. I've not even mentioned what to do with this level. So you have to stay subscribed and hit the notification bell so that when I release content concerning this, you'll be the first to be notified. So how do you determine this? You look for a break above or below. If price breaks above in the month of March, this is a strong indication that that year we'll be looking for what? More of what? Bullish sentiment, and then this established as a low of the year. So we do not expect price to, after breaking this high, to come back down here. This have 89% probability that the low will be established when we break above this zone. So what do you do with this information? What you do with this information is simple. When you see that break, you move to the lower time frame, especially the daily, and start looking for what? Bullish setup. Maybe price may come back to retest these zones. Okay, you'll start looking for bullish setups in form of what? ICT concept. Using what? Fair value gaps. Using what? Liquidity. Using displacement. Or you use any form of ICT concept that you know. Integrate it with this, and you will see your result transforming. You can literally use any entry model, supply and demand, support and resistance, trend line, whatever entry model you want to use, as long as you are at the right direction. This will give you a more better trade setup. You will know exactly what to look for and not guessing. Okay. Also, on the downside here, if price closes below, this is a strong indication that throughout the year you will be looking for what? Bearish trade setup. Okay. What we don't want to see is a week price trade above and then closes back in. This means the buy side liquidity has been pushed, so market will be looking for the sell side liquidity. So you can start looking for bearish move until you get this. But also take note, this most likely will lead to a break here. So we then continue that bearish move for a considerable amount of what? Months. I will show you in my subsequent videos when this will cool off and when you should be expecting a form of retracement so that you won't be caught at the wrong side of the market. Remember, price move because of two things: to purge liquidity and to rebalance. Okay, if price seeks to take liquidity, it does things like this. If it seeks to rebalance, it seeks for fair value gaps that have been left behind. Okay, those are the areas where price moves towards. The reason. I will, at the end of this, in my next video, I will be introducing storytelling into forex trading. Okay, you'll be able to tell a story from a particular time, from a lower time frame to a higher time frame. Okay, and also from a higher time frame to a lower time frame. So let's take a look at this. So now, starting with this year, you can see we have January high here, and February. January, February was the highest in this case, yeah, and the lowest was January. Okay, in this case, you see January, February, the candle as printed. Okay, so in the month of March, we have a break below. What do I do with this information? From this, I understand that for the rest of the year, we'll be looking for what? Bearish setup. And as you can see, we had 1, 2, 3, 4, 5. 5 bearish candle out of 6. Okay, this 6 is a form of order block. Okay, to continue the order flow. So by so doing, this was the high of the year. The low of the year probably will be this, because this is the month of December here. This is the month of December, and the reason why price is heading up, to me, I want to see where price will mitigate this fair value gap. Okay, or with this order block hold it to push price to the downside. So that is that for this year. Let's look at previous year. In the previous year, we have the high here, the low here. You can see immediately I see this now, I know that okay, for the rest of the year we will be bearish. Okay, and you can see price traded back in. Probably if you go to your lower, in this particular place, we don't have any reason for it pulling back apart from maybe taking some liquidity. But if you go to the weekly, you will see the reason why you need to, market needs to go up before going down. Then as it was going up, you can see this remains the high of the year. Price did not breach that. From there it went down, okay, till the month of December here. This other month here, we have the high, we have the low. You can see price came down, traded back in, okay, in fact expanding the range. But the moment I see price coming here first, price came down, pushed the low. In this case, this is the high, this is the low. Price came down. Now in this particular year, January, February, high and low has been drawn. Price came, took the low, okay, and then started trading up. When we add a close above here in this particular month, you can be bullish for the rest of the year. Also, from this level, you can be bullish if you apply ICT concept here. You can say we have a liquidity sweep here. From a lower time frame, you can look for entry models using ICT sweep of liquidity, buy side to the sell side. You are going to see a very beautiful trade setup for this. Okay, then you should be able to form your buyers using this monthly chart alone to know that price will be heading higher. Looking at the previous year before this, that is 2019, we have the high, the low, high and low. We have a break below. This shows you that for the rest of the year, we should be looking for bearish setup. This is the high of the year. This also 2018, the high, the low, a break below. You can see price moving to the downside. High of the year. In this case, we have the low, the high. You can see price breaks above. At first, we'll be looking for what? Bearish signal because of this. But with your storyline, you are going to see your obstacle. Okay, every time frame has their obstacle. I will talk about that so that you understand, you don't get caught up with this week. Okay. And however, if you have been looking for bearish signal and probably you'll be taking losses, don't worry. The moment price closes above in the next month, then you can switch to bullish. And as you can see, you would have made good money just focusing on bullish setup for the rest of the year. Looking at this here, we have low, we have high here. In this case, in this case, it didn't work out here due to so many reasons. You can see price, then the low was taken out here. So this is one of the areas where it does not work. So it's not an holy grail, okay? But with range expansion, I will be able to show you if that level will be right or not. So in this particular one, the high, the low, and there's a fair value gap here, and probably price traded into that fair value gap in this particular year. From there, you can switch for a bearish move. So because the objective has been met here. So in this case, price closes below, trade back up into the fair value gap, and then price went lower, creating a break of structure. If you understand market structure, you will not be following this blindly here, because this is a break. So we need this low, this equal lows to be taken, and that's what price did. Took that equal low, liquidity taken here, ICT, move upward. Okay, and that was what happened exactly there. If we look at 2014, we have the high here, we have the low. You can see market swept liquidity several times here. So from here, you can be looking for bearish setup, and you can see this year was a very, very down year. You will have profited much from this. If you have a month like this, instead of you looking for bullish, bearish, bullish setup within your lower time frame, you get lost in the 5-minute time frame. Zoom out and look at what the higher picture is saying. So if you see your monthly has taken out the DZ zone, then it's more likely to look for bearish setup in the lower time frame than bullish. Okay, and so on. So you can backtest this on different currency pair. This is on Euro USD. You can try on pounds, you can try on BTC, you can try on US 30, the indices. You can try on different asset class, and let me know your result. On that note, I will see you in this video.